We've seen a long list of tax increases the last few years. There have been 19 different tax increases that affect investors in general, and 3 that specifically affect the Smith Maneuver. What would happen if the Liberals changed, made a tax increase that specifically attacked the Smith Maneuver? Would that mean it's still a good strategy, still something worth doing, or how would that affect us? So what we're going to learn today is what happens if the Liberals attack the Smith Maneuver. So what tax and regulatory changes have happened that affect the Smith Maneuver? What changes might the Liberals do that would attack the Smith Maneuver? Why is an attack on the Smith Maneuver possible? What are the 19 tax increases that affect investors in general? What additional tax increases might the Liberals be thinking of? Why are the Liberals continually increasing taxes? Is it likely they would attack the Smith Maneuver? And what would actually happen if the Liberals attack the Smith Maneuver? All right, so the ones that have happened so far that affect Smith Maneuver, there's been basically 3, 2 of them negative, 1 positive. So one of the OSFI rules, they actually have reduced the amount of new credit that you get. So basically for Smith Maneuver, it reduces the amount of new investment by about 20%. Okay, it's a small decrease in the benefit, but it is somewhat an effect. Now, also the higher capital gains inclusion rate means the refunds are a little bit smaller from the Smith Maneuver as well. So those 2 have been negative. The one that's actually been positive, because tax rates are quite a bit higher, especially for higher income people, tax refunds are bigger. So those are the 3 things that affected the Smith Maneuver so far. What else could they do? So, for example, Quebec has a limit on interest deductions. It's limited to investment income, which means in Quebec, they can still do Smith Manoeuvre. They still get all the deductions. However, they don't get tax refunds. They have to just keep carrying forward all their deductions until they can use them in a future year. So if not getting refunds would be, a significant lesser benefit from it. The other thing they could do is they could just jack up investment taxes more. Like we went up from 50 to 67% inclusion rate. They could go to 75 or 100%. They could do much higher. They could increase the tax on dividends. So there's other things they could do just by attacking the dividends, the investing in general. So now, what are all the 19 different increases? So this is why an attack is possible, because what the Liberals have done, they've been specifically attacking investors. So there's 19 tax increases that affect them, and the Smith Maneuver gets caught up on all these investment attacks. So let me just kind of go through them. So, in 2016, when they first got elected, we increased the top tax rate for anybody making $200,000, which is not a lot, to more than 50%. And more than 50% is always a problem. It's like I do all the work, I should get at least half. So then the family tax credit was eliminated, which was a decent tax savings. Then the sale of principal residence has to be recorded. So there's a lot of speculation about them trying to tax principal residences in some way. So, 2016, they already forced that. Now they have to be recorded, even though there's no tax, but you have to record them all. In 2018, the tax return was doubled from 4 pages to 8. It became a lot more complex. So in 2019, there was the 50% passive income tax for anyone who invests inside a corporation. And that affects, like a lot of small business people do it that way. That was kind of our recommendation for a lot of small business people. Have a corporation, invest inside the corporation, and that's your retirement fund instead of RSP. Doctors were all being routinely recommended to do this. But now it's a 50% tax on these passive investments. So then in 2019, the carbon tax was increased, and it was introduced. It's been increased every single year, and it seems like there's no end in sight for that. Then they also did what's called, what's colloquially called the No More Pipelines Act, which basically blocked all future pipelines and even shut down all the natural gas shipping plants where we could ship it overseas to other countries. So then there was the tax on split income. We call them the TOSI rules, and that affect basically a lot of small business owners, where their spouse or their kids are working partly in their business. So that affected, it was again a tax increase on small business owners who are a lot of investors. Then the stock option deduction in 2021 was capped at 200,000. So, and stock options often you may hold them for quite a few years and cash them in all at once. So now they're capped at 200,000. They got to plan around all this. In 2022, we have the new trust reporting rules, which include in trust for accounts for kids. Like a lot of people just save some money for their kid in an in-trust for account, like outside of an RESP. And now those actually, if they get large enough, or 50,000, they require that you do this complex and expensive tax reporting. So then we had linked to that, we had the Bear Trust debacle, where everybody who had anyone who had a trust all of a sudden had to file a return, even if there was no tax. And the big one where this affected is anybody where a parent and child are on the same house was affected. And it's a debacle because they required the filing, otherwise you get a big penalty. And then the last minute they change their mind. Oh, sorry, you don't have to do it. A lot of people had already done it and everyone is panicking about it. And guess what the Liberals realize is like tens of thousands of Canadians wouldn't even have known that they have done it. So, if you, for example, can go on your kid's mortgage or whatever house to help them buy a place, or you got an aging parent and you go on their house for tax purposes and so you can help them with their finances, those things require filing every year for a trust or else there's a huge penalty. So, and again, that was canceled at the last minute. Then right after that, and also 2022, we had the underused housing tax debacle. So if you have underused housing, you had to file. And again, the last minute they changed their mind. Oh, so you don't have to do it. They announced another deadline date. The last minute they changed that one again. So in 2022, there were two big debacles where they required extensive new reporting, otherwise a big penalty, and then last minute changed their mind after a lot of people had already done it. So then 2023, we had the OSFI rules. So this is reducing the amount of interest deductibility. Like it's reducing the amount of new credits you can get in a readvancement mortgage, but which reduces the amount that you can borrow to invest. So then they had the property flipping tax. So if you have a property for less than 1 year, you get taxed on it. And also the ban on the foreign ownership of property, all in 2023. Then in 2024, we now have the capital gains inclusion rate. It's actually a 34% tax increase, from 50 up to 67. So it's a really big increase. Then we had the new alternative minimum tax rules. So we've had an alternative minimum tax for 25 years, but now it's a much steeper one. And actually, weirdly on it is the main thing that ended up getting affected on it is charitable donations, when people make larger charitable donations, which is a really weird thing for them to be able to attack. But anyway, those are in place. There is also the stricter general anti-avoidance rules called GAR. And this one's actually really scary. So we've had these GAR rules for a long time. And it used to be that if you did something if you did a transaction only to save tax, it could be denied as just a sham to try to save tax. So, but there had to be some other reason. Now, what they've changed it to is if tax is among a series of reasons for doing a transaction, it's denied. So basically, any transaction that is not specifically allowed in the Tax Act that saves you tax is banned. So that's actually really scary what that one's going to do. And then we have the 2% share buyback tax. So all that happened here in 2024. So what additional tax increases might the Liberals be thinking of? So the one I just talked about is GAR, and that's the one that's really kind of scary here. And it could be quite Orwellian. You think of like anything that's not specifically allowed in the Tax Act. So when you think of a new method, new idea for tax savings, if it's not specifically allowed, it could just be banned. So that's actually quite scary. And at this point, we don't know how they're going to use it, but it could potentially be, really massive. So the Liberals have had some private discussions with a left-wing think tank about a home equity tax and a wealth tax. Now, wealth tax also includes gift tax. People don't realize that. So, if they're going to put a tax on people, say with over 10 million, what that means also is all Canadians have to have a limit of how much money they can give their kids. So otherwise, it's easy to get around a wealth tax. You just give the money to the kids just before you die. So they have to put that limit on. And that's what they have in the States. I think it's, 15 or 20,000 or something is the maximum any American can give to their kids in a year. So that's part of a wealth tax. And the home equity taxes, they got this recording our house sales already on the tax return. Now, it doesn't take much of a step to tax your home equity. And there is some debate about whether that was it's possible that they would do it. I think it'd be really a bad one, but so probably a pretty unpopular one, but it depends on how they could spin it. So now there's one budget left before the election. And, for us investors, every year when the budget comes out, everybody's up on edge. What else is going to happen? And it's just a big new tax, big increase, and usually with no warning, and often done in quite a bit of a nasty way. So we're kind of waiting to see what's going to happen. We got one budget left. So everyone's kind of bracing ourselves because that could be, just before the election that they do a really big one. Now, so people wonder, why are the Liberals increasing all these taxes? I think a number of them happen bit by bit and people haven't quite really seen it. But see, you listed 19, and actually I don't think this is all of them. I just sat down and wrote those, but I kind of have a feeling I'm probably missing some. But it's just constant. Every year there's significant tax increases, mostly affecting, investors. So why are they doing it? And so without getting into politics, just to give you a little high level view of what could be behind all this, is that So it is a political strategy. So like creating a wedge issue is just a common political strategy to get votes. And the Liberals, this seems to be the main one that they do. So what you do is that they attack one group of Canadians that are supposedly, advantaged in some way and try to create this division between them. And then they can say, look, we're the ones that are supporting what are the people that are disadvantaged. So, for example, a lot of the stuff on the investment is trying to create a wedge between, the rich, however low they define that, and poor. And now the health tax could be between, older Canadians and younger Canadians. Or by creating that division, it can often be a very effective vote-getting method. And I think that's kind of what's behind it. And that's also part of why some of the tax increases are sometimes announced in a really nasty way on purpose. And the reason it's done on purpose is it's because you're trying to get a wedge issue. You're trying to get Canadians to argue, divide into two groups and argue against each other. So, for example, we have the capital gains inclusion rate, and it was announced, we didn't know it was coming. There was only 2 months notice on it. So it's mostly affects real estate, and it's just too little time to adjust anything. And it's retroactive. So if you inherited a cottage from your parents 50 years ago, this applies to all of the last 50 years. So, which is, it's not tax fairness thing, is that you shouldn't have to pay tax on, you should know what your taxes are, what the rules are. They shouldn't spring last minute things on you. And, at the same time they did it, they actually came out quite, insulting, saying they used this line, 0.13% of Canadians are affected, which is of course stupid. Like, I think it's more like 25%, not 0.13, because everybody with a cottage or a rental property, or most of them are going to be affected. So, but they try to make it look like it's a few elites that are attacking them. So it's intentionally done that way. So I'm just trying to get you to understand what a political wedge strategy is and how it works. Now, it's also part of this, there's just a left-wing view to try to create equality instead of growing the economy. So people, a lot of talk about in politics about left and right, and there's different areas, but in the financial area where I live, the left wing basically means allocating income between people, redistributing, and the right wing basically means growing the economy. So that's kind of what it is. And this is this kind of that view that we're trying to create equality. And that's why we have not seen any growth in the economy, but we've seen all this moves to try to create more equality. So the government normally has unintended consequences that create new problems, which are often bigger. So it's another reason why they're doing that. And I'll give you an example. So Liberals have spent a ton on some different social programs, but, like, for example, 40% new government employees with a whole bunch of new departments. So all this more cost that's built into here. And we've ended up with a whole bunch of inflation. And now inflation has, made houses, everything, cost of living is way higher and houses are way higher. And so for young people who are trying to live, in the city or whatever it is and try to buy a home, they're actually worse off. So even though a ton of money was spent on social programs, the lower income people and younger people are generally worse off, not better off. So often you think you're helping, but the saying is there are no solutions. There are only trade-offs. And that's what happens. You do something, but it has unintended consequences. And very often a solution is done because it sounds good without realizing what all the unintended consequences are. So, and the other reason Liberals are doing it is just because they're just heavily in debt. It's a massive annual deficit. And, they should rein it in some case. They should really balance the budget. So now, having said that, so is it likely that they would attack the Smith Manoeuvre? The truth is, no, it's not actually very likely, and two reasons why. So one is these new GAR rules are kind of scary because they could mean anything that you do that has any tax benefit that's not specifically allowed would be denied. However, borrowing to invest and interest deductions is specifically allowed. It's income tax folio S3-F6-C1. It is specifically allowed. So it wouldn't get caught up in that. So there's also, they could attack interest deductibility. But that's not just investors, it's not just Smith Manoeuvre. Like, basically, this is a normal business expense for all businesses. And if you attack that, it's a much wider net. And, we're trying to create investment, that businesses invest, and to attack, all businesses that invest for any reason would be not a good policy. So, and it's just a normal business expense. And the other reason is that, so not enough people really do this borrowing to invest or do the Smith Manoeuvre to make it an effective wedge issue. So if the Liberals are looking for a wedge issue, this just really wouldn't be a good one. There's just not enough people doing it. Now, the thing is, so let's say that they did, though. What happens if they attack the Smith Manoeuvre? Let's just take the worst case scenario. So this is actually a Dale Carnegie principle. If you're worried about something, think, okay, what's the very worst that could happen? If you realize, well, that would still be okay, then you don't have to worry anymore. So the bottom line is, it would not, even if the Smith Manoeuvre had less or no tax benefits, it is still an effective strategy. So the main purpose of the Smith Manoeuvre is to build a retirement nest egg over time without using your cash flow. That is the main reason, and that would not be affected. And so we've done like well over 1,000 financial plans, and we found that it really fits in well. So a lot of people are not able to save enough, invest enough to have the future that they want, and the Smith Manoeuvre gives them a whole other nest egg that builds up over time, but that doesn't use their cash flow. So it's a really good fit in there. And all of that would be unaffected by this. So now when we look at the various scenarios with the Smith Manoeuvre, typically about 60% of the benefit is the difference between the investment return and the interest rate. And about 40% of it is tax savings. So if there was zero tax savings at all from the Smith Manoeuvre, you'd still have 60% of the benefit. And so if the benefit is just reduced a little bit, you still have 90% or something of the benefit. So it still wouldn't affect it. So bottom line, the Smith Manoeuvre is still very beneficial. If it's done for the right people, done the right way over the long term, it would be worthwhile doing even if there were no tax benefits. So now, having said that, I think it's very unlikely that it gets attacked. So I don't think we have to worry, but even in a worst case scenario, we would still be fine. All right, so thanks for listening. My name is Ed Rempel. My blog is Unconventional Wisdom. It's #1 in Canada for a full-service financial planner. It's just edrempel.com. Also, unconventionalwisdom.ca, because we're in Canada. If you're interested in potentially talking to us about your situation, just go to Ed Rempel. We offer a free 30-minute consultation. Just go to edrempel.com/talk. Also, a blog, a podcast, and YouTube. If you subscribe to them, all that happens is you get an email notice once a week when I put something new out. That's all. We don't market it in any way. That's all you get. So the podcast is edrempel.com/listen, and YouTube is edrempel.com/watch. So whether you prefer to watch, listen, or read, all of them are available to you. Thanks for listening, and we'll talk to you next week.